Hey everyone, so it took me a while, but I am officially convinced the real estate market will not crash. How did I come to this conclusion? So I am still reading a book called Recession Proof Real Estate Investing. As you know, I'm a real estate investor, love it to death, still drive for dollars, still looking for deals. But at the same time, housing prices are still going up, especially in Columbus, Ohio. It's not going up as much as it did before, but the reason is supply and demand. For whatever reason, I believed that demand for housing would go down and that supply would eventually hit the market, not with new construction, but just with people wanting to get out of their homes. But the same thing that we've touched on since day one is the same thing that we're touching on today, which is a lot of people, 90% of all Americans have less than a 5% interest rate. So what does that mean? That means the Fed raising rates in order to stop inflation, in order to stop housing prices from shooting up, that was a success. Housing prices are still going up, but not as fast as they would have had the Fed not increased rates. The problem is that now everybody is stuck in their homes. They're more scared of getting a higher interest rate and a higher monthly payment and less of a home than moving for a new home or a new field. So this is a unique situation where people typically leave their homes after 5 to 6 years. We might start to see a shift if interest rates don't go down to where people are staying in their homes longer, having more equity in their homes. And that is going to shift the mentality to where people are going to want to hold on to their investments longer versus just leave their neighborhoods. So because interest rates are so high, new construction has dwindled, which means supply is still very, very low, and supply is not really increasing because, again, people are hesitant to put their homes for sale. The only decent properties that are hitting the market are rehabs, new builds that are still slowly trickling into the market, which surprisingly, even in June, you still have new builds hitting the market because people were so backed up and they're finally getting to completing these projects. And they're pricing it high and then boom, $50,000 price cut, $10,000, $20,000 price cuts. We're seeing it, but they're starting so high that those price cuts are really nothing because these homes are still super expensive at exorbitant prices that people are just not able to pay. So a new build hitting the market for $300,000 in a decent area, not the best area, would have sold for that price. But now people are like, this area is not the best. Why is this home going for $300,000 when a duplex is going for the same amount, right? So now you start to question certain things like that. But in all reality, with 90% of people having less than a 5% interest rate, what we're going to have to see is we're going to have to see interest rates come down. I even have businesses talking about expanding their operation, expanding their facility, and they can expand by 3 times more within the same complex. However, they're not expanding their building, so they're not hiring people because of interest rates. As soon as interest rates go down, they're going to start new construction. They're going to have more jobs to offer. That means more people get raises, more people get promotions. More people can afford more home. More people can afford to go remote. This is going to lead to a lot more remote work, especially if interest rates stay high. And so that's going to force people to say, you know what, I need to buy more home. And we're not going to see a huge change in supply, but the demand for housing is going to continue to increase, especially if people are having to stay in the same homes together. But what we will see is over time, more babies, which is going to lead to a need to move up in the house, a need to work harder, demand more. This is going to rejuvenize the job and labor market to where people are being more efficient at their job in order to keep it. In the same breath, the higher interest rates is going to cause people to work harder, which means they have less time for what they do in the bedroom and more time to save and invest for a rainy day, because they understand that now is not a time to be extravagant and live lavishly. Now is a time to buckle down, right? So until interest rates go down, we're not going to see an increase in construction. We're not going to see an increase in supply. Therefore, the demand will continue to remain high. And what's going to happen first is people are going to buy homes when interest rates decrease before they have the ability to increase supply, which will take 6 to 12 months just to build new construction, right? So again, a lot of these specs are not even being built because of these current interest rates in the economy. So what we are anticipating is that in Q4 of this year, interest rates will actually start to come down very slowly. They're not going to speed up this process. They're going to have interest rates come down slowly in order to see where is that point where we don't have too many buyers in the market, but we have people starting to utilize construction again. Because at some point, people are going to have to say, how high can interest rates go? Some people are anticipating interest rates go all the way up to 8%. And if that happens, a lot of businesses will halt construction until they see some lag in the market, until they see some decrease in rates, which allow for them to build new construction at cheaper rates than what is currently going on. So businessmen, businesswomen have been spoiled with 2-3% interest rates. They cannot go for 8% rates. And so that is going to affect the job market in some ways and still lead to more unemployment, because there are going to be people who just aren't as efficient at their jobs in order to keep their jobs. So I do not believe the housing market is going to crash, because demand is always going to be higher than the supply for the foreseeable future. Until we can get more new builds, until we can get more construction, until we can get more people saying the interest rate doesn't matter, we're going to sell this home and rent, then I just don't see it happening. The only way is if out of all that 90% of people, about 10 to 15% of them just simply couldn't afford their homes, even at 5%. That is the only way I see more supply hitting the market quickly to alleviate some of that demand pressure. And that is going to affect how many buyers are still going to be in the market when they see a lot of these homes that might need fixing in order to get back on track, and a lot of these banks reallocating these homes for auctions and things of that nature. So if you like this video, make sure you leave a like, comment, and subscribe. I do believe more auctions are going to be hitting the market for housing, but do I believe it's going to be in a significant number? I don't know. It really just depends on how high interest rates go and how that affects the labor market. You know me, I post every single day at 8 a.m. daily on YouTube and Rumble, and I can't wait to see you on the next one. Peace.